记录时代精神，连接东西方精英翘楚。我是潘磊，这里是英国首都伦敦，欢迎您收看瑞内人物访谈节目。本期节目我们有请 Tim Lafferty 先生和我们讨论企业风险投资的兴起。近年来，由于破坏性的创新竞争对手，导致大公司的寿命缩短，大公司在初创公司中持有少数股权的企业风险投资一直在增加。这使得企业可以更加了解新的技术和市场的需求，并培养加剧了企业的创新意识。Global Corporate Venture 是一家企业风险投资活动提供咨询和交流的平台，其成立于2020年。据统计，2300家企业参与了3600多笔风险投资交易，交易额达1300亿美金。本期节目引用有关亚洲风险投资的数据，进而解析这些公司如何以及在何处选择投身于此。如果您正在考虑建立一个成功的企业风险投资 CVC 部门，本期的客座嘉宾 Tim 先生将为您揭开其面纱。那有请 Tim 做客我们的2022年首期瑞内人物访谈节目。So let us welcome Tim, and thank you for your time today with us. Please give us a brief introduction about corporate venture, global corporate venture, and what corporate venture is, please. 请简单介绍一下全球企业风险投资公司是做什么的？什么是企业风险投资 ？Tim, please.
Thank you, Renee, and thanks for the opportunity to speak to you today, and to all of you that are watching. Welcome. So, yes, Renee asked me to introduce the company briefly. Global Corporate Venturing. We started about 11 years ago as a magazine, a trade magazine, but it's evolved into us being a membership organization for corporates that invest in startups. And so we provide news and data, training, and we organize events. And actually that's the thing that probably our members value more than anything, is to come together as a community, because they share some common challenges, which they like to compare notes, and they also do deals together. So our largest conference is in California, near Silicon Valley, which is due to be in February, but I think we're just reviewing whether COVID is going to permit us to do that. We may need to delay that. We have ones in London, Israel, and in Asia as well. We've done a couple in Hong Kong, and we're planning to go to Tokyo again this year, again April, but COVID permitting, that Japan's not allowing foreigners to come in at the moment, so we'll have to see if that's going to change. So that's our company, and I'll talk a little bit more perhaps about the training side of it in case any of you are interested a bit later. But in terms of what is corporate venturing, it ranges from a number of sort of activities around in the early stage discovery, which is things like hackathons and scouting and that sort of thing, up through corporate accelerators and incubators towards investment and mergers and acquisitions. And the further sort of up and to the right you go, the more capital and the more time you need, and the larger the sort of sums of money and the size of the startups become. And where we tend to focus is primarily on where corporates take a minority equity stake in young companies. So we track any deals, and I have some data on that. In fact, I've got some slides that I'll send to Renee after this, and she'll look to potentially make those available on the website, which has some data. But I can talk to some of that in a moment.
Please,
Renee.
Thank you. Who is doing corporate venture, and why and how they are going it? So 谁在做企业风险投资？他们为什么以及如何做的呢？Tim, please.
So who's doing corporate venturing? It's primarily large companies. The larger they are, the more likely they are to do it. So 70%, for example, of the Fortune 100 companies do some form of venturing, and about 40% of Fortune 500 companies do it. So, and the reason that they're doing it varies, but primarily they have strategic reasons, at least partly strategic, and often also financial. But strategic is usually the most important one. You know, the reason it's not more for a financial return is that, you know, if they're investing, you know, $100 million, you know, through a fund, and that makes a good return, you know, even if you tens of millions or hundreds of millions of dollars isn't going to move the needle very much on a multi-billion-dollar corporation. So what they're primarily looking to do is to, you know, corporations struggle with innovation, and, you know, large companies is a difficult thing to do. And so they want to work with entrepreneurs, and one way they can do that is to invest in young companies, and then they get a board seat if they want. They can, you know, get access to you know, the business plan, and they can influence to a certain extent the direction that startup goes in. The most common, we do a survey every year, and the most common reason companies give or the sort of strategic returns they're looking for are synergies and revenues and P&L impacts of the parent corporation. It's also a way of entering new markets and creating business lines and units. What it's not so much about, which might be a surprise to you, is it's not normally viewed as a first step to acquiring a startup. That does happen sometimes, but not as often as you might think. Of course, a corporate that has invested in a startup, perhaps if they are interested in acquiring it later on, they might you know, they might have a bit of a head start, but that's not usually the reason to do the investment in the first place. You know, this corporate venturing is a very much a growing area, and, you know, perhaps surprisingly, COVID-19 hasn't really slowed anything down. In fact, 2021 was a record year for the number of deals. So we identified about 2,500 corporations who did at least one corporate venture deal last year. We're seeing a new corporate venturing unit being launched almost every week. There were about 5,000 deals that we tracked globally that involved at least one corporate in a venture round, and the amount that was invested in those rounds totaled almost $300 billion. That's not necessarily the amount the corporates put in, because they tend to invest together with financial VCs, so those are the round totals. But, you know, it was 5,000 in 2021, and the year before it was 3,600. So it's a big increase in the number of deals, and actually the amount invested has more than doubled in a year. So it's certainly upwards and to the right, and all the sectors, you know, we cover all the sectors, and they're all growing. The biggest one traditionally was sort of the IT sector, but health has now caught that up, and the health sector lends itself quite well to corporate venturing, because it requires often deep pockets and, you know, patient capital, which perhaps the financial VCs don't have to the same extent. Financial services has grown a lot as well. So certainly it's a very popular thing for corporations to be doing, and it's, you know, it's partly, as I say, as a way of identifying new opportunities, but also you know, it's a way of keeping an eye on disruptive technologies that could be a problem if you don't understand them. Nobody wants to be the next you know, Kodak or Blockbuster that you know, doesn't see a disruptive innovation coming.
Thank you. Yeah.
Renee. So I think you asked who was doing it and why. Did you ask how are they doing it as well?
Yeah, please give us
Okay.
the insight of this point as well.
Thanks. So around 60% of corporates that invest are doing it from the balance sheet with a dedicated corporate venturing unit. Some do have a dedicated fund, so they're not doing it off the balance sheet. And some do it, without a dedicated corporate venturing unit. Of those who do it with a fund, there's kind of two approaches. One very much has, parental control. The other is a more independent fund structure, where the corporate is perhaps a single limited partner or an investor in that fund, and the fund acts more independently and perhaps more for financial reasons than strategic. But there are pros and cons of those two models, which I probably haven't got time to get into today, but we're happy to follow up with anybody if you're interested. And as I say, we run some training programs as well that cover this sort of thing. The typical fund sizes are, the majority are under 200 million. About 25% are under 50 million. So, but it's in terms of, if you think about, how much would I need to get started if you're a company that's thinking of starting corporate venturing, it kind of depends. And again, it's something we can get into in more detail, but depends on a number of factors. But that's just to give you an idea of, how much most companies are investing at the moment. Some companies, as well, or instead of doing direct investments, do they do fund investments. So they invest in financial venture capital funds as a limited partner. It's called an LP, and that's a way that they can either, if they haven't done venturing before, it's a way perhaps of getting started, the toe in the water, so they can sort of start working with venture capital firms and understanding how it all works. Or it may be a strategy where they need some expertise in a particular industry sector or geography that they don't feel that they have the in-house expertise for. So some of them, some corporates, you will invest in multiple VC funds around the world. Renee, any other questions?
Thank you very much. So our next question is, what level of the corporate venturing do you see in Asia, and which country are the most active one? So 您认为亚洲的企业风险投资水平如何？哪些国家最活跃呢？ Tim, please.
Okay, yeah. So Asia. Maybe before I do that, I just on a global level, tell you that the companies that are most active. When we first started tracking this about 10 years ago, it was typically US companies like Intel and Qualcomm. And then for a while, it was Chinese companies, Tencent, Alibaba, and others. And now it's a mixture, and includes some Japanese companies, quite a few Japanese companies as well. In fact, the most active globally is SoftBank with their Vision Fund, and that's huge. And in fact, if you were to strip out SoftBank from our numbers, it makes quite a big difference to the overall picture. But in terms of Asia, the most active Asians, CVC, so companies with their headquarters in Asia, SoftBank is top, and then Tencent is most active, and then it's mostly Japanese and Chinese companies. The difference, I would say, between Japanese and Chinese companies in terms of venture is the Chinese companies, apart from Tencent, really tend to invest in China, mostly in China, whereas Japanese companies tend to invest a bit more globally. So Sony, for example, has venture teams in Europe and the US. So you know, it's like I said, with the global pattern being upwards and to the right, it's a similar story in Asia, although certainly in terms of deal volume, we saw about 1,800 deals last year in Asia, compared to 1,300 the year before. We saw $78 billion invested in deals in Asia, which was much more than 48 billion the year before, but actually similar to 2018 levels. So there's been a bit of a valley shape in terms of deal volumes in Asia. So the countries we're seeing the most deals in Asia are Japan. Actually, is now we've seen the most deals in Japan. There's been a 6-fold increase in 3 years. In Japan, we saw over 650 deals in Japan last year, compared to China, which is the second most active, which is about 400 deals. So that's been quite an interesting trend we've noticed. And one of the things actually we're looking to get to the bottom of is we actually had a member of the team join 3 years ago who speaks Japanese and Chinese, and so we're wondering if actually we're seeing more deals because of his language skills. So we're investigating that, but I do think there have been a lot more deals anyway, as well as us spotting more deals. And the other sort of active country in Southeast Asia is, in Asia more generally is India, where there's 300 deals we saw last year. So I think that's the top line story for Asia, Renee.
Right, thank you. So what advice would you give to the C-suite executive who are wondering if their company should start doing corporate venturing? So 对于想知道自己公司是否应该开始进行企业风险投资的高管们，您有什么建议 ？Tim, please.
Okay. So, you know, if you're thinking of starting a corporate venture unit, probably where you want to start is, you know, to be very clear on, you know, what you're hoping to achieve, why you're doing it, and how you're going to measure success. Which sounds obvious, but it's surprising how many have started and have fallen down on that aspect because, you know, because you're doing it for strategic reasons, probably at least partly, those are really hard to measure strategic returns. So you have to be clear on the types of things you're going to measure, the impact on the corporation, and you know, apart from just how many deals have you done, it's, you know, what strategic insights have you been able to gain. And you know, one of the things about corporate venture units is they tend to be around a little bit longer than CEOs are, and so, you know, they need to survive a change of management, and so they need to be able to articulate why they were started in the first place and what value they're adding, in order to keep going and justify their existence. So the clearer those goals are up front, then the more likely they're going to be able to deliver on them and articulate them as well to future management. You know, because venture investing startups by nature are, yeah, risky. They don't all make it, and so those you know, those initial years, you're going to see some failures before probably you see some successes. Unfortunately, it's the nature of the game. So, you know, there's a bit of a valley to get over for those first 3 to 5 years. So you need to kind of have at least that sort of length perspective before you start, you know, judging it too much. And remember that, you know, you make an initial investment in a startup, but it's most likely going to scale and need follow-on capital, and you will probably want to keep some dry powder for future rounds, because, you know, you want the company to succeed and sort of protect your initial investment, but also, you know, the message you could send to the market if you don't follow on perhaps indicates a lack of confidence in that company. So you know, you need a sort of a 5-year horizon at least, and the capital to get you through those 5 years, including follow-ons. You're going to need to build a team, and the average corporate venture team is only 2 to 5 people, so they're quite small initially, at least. And you probably want to look at a mix of people who know their way around the corporation, have worked there for some time, because there's a role here of connecting the portfolio companies internally to the business units. But you also probably want some people that have venture capital experience, have done deals, know how to do deals, understand the financial disciplines of managing portfolio companies. And also, you know, in this day and age, probably don't even really need to say it, but you know, diverse teams of people and diverse management of startups. There's data to show that they're more likely to be successful. So, you know, a diverse team of 2 to 5 people with a mix of internal and external experience. And then something else you probably need to consider is who the corporate venturing unit is going to report to. About a third of companies that respond to our survey report to the CEO, about 20% to the head of strategy, and similar number to the CFO. And who the corporate venturing unit reports to can make a difference in terms of how they're being judged. A CEO is probably going to be looking for some slightly different things, perhaps, to a CFO in terms of, you know, judging success, measuring value. And it's a little bit of a challenge for the corporate venturing units that keep changing reporting lines, and that happens quite often, and it's, you know, it makes their life a bit more difficult because, you know, priorities then ultimately change. The other tip I would give, and I'm in danger here of plugging our own company, but we have a program of training courses called the GCV Institute, and the programs, they're a mixture of online and in person, but they range from programs for companies considering setting up a corporate venture unit. So some of the points that I've been talking about here, like, you know, do you want to create a fund, or are you going to invest off the balance sheet? How are you going to measure value? That sort of thing. We have another program that's for people that need to work with the corporate venturing unit, but they're not actually in the corporate venturing unit, so they might be in business units or strategy or M&A departments, or, you know, R&D, and they need to understand really a little bit more about how they can work together with the corporate venturing unit. And then we do some deep dives for professionals within the corporate venturing unit, you know, who are doing deals, and you know, there's like 2 days intensive in-person, like classroom workshop type programs. So you know, if anyone's interested in that, again, there'll be some information in the deck, but it's the gcvinstitute.com is the website for that. So those are my top tips, Renee.
Thank you very much. Yeah. Thank you for sharing the wonderful discussion with PBEC Society today. And 再次感谢 Tim 先生今天做客我们的访谈节目。那我们下期再会。